All right. All right. So ES opening relatively flat after tracing out 5 waves down from Friday's high, which should complete C wave of the larger ABC down pattern of the first of a larger diagonal. Following the 5 wave down, ES actually produced a relatively clean impulse up and formed a bullish fair value gap on the 1 hour chart, which price just about tapped into. Now, I am leaning that we are going to see price get bought in this zone to at least trade above the pre-market high, if not yesterday's cash previous day high. Mark that out because I'm not really sure if we actually have enough juice with CPI tomorrow to cross the ES previous day high at the 6 p.m. open. I think it's more likely we just try to cross the cash market previous day high, which was SPX 5705. So I'm going to label that. But in the very short term, looking for entries to go long, although we are tapping into this H1FEG, which should act as support. Just looking at the the SPX fractal pattern, we have ABC up and some sort of a triangle pattern. See here, A, B, C, D, E. Now, I don't believe this is the correct triangle pattern. I believe it's actually should be ideally a more bearish one. Well, not more bearish, but a bearish B wave to trade below the 345 low because we have this 3-wave move. So if we were to immediately break higher, I think there's risk that we reverse to the downside, forming a bearish WXY model, which does not align with the higher degree count, higher time frame count, suggesting that we are progressing in the second wave position, targeting the 382 50% retracements. So I think it's probably more likely that we have an A wave, then A, B, C, D, E, B wave, and decline for a C wave of a larger second. So 1, 2, 3, 4, 5. Probably going to be more closer to something like this. Ideally, forming an impulse and ideally retracing 50% of the decline from Friday's high to confirm that the second wave is most likely progressing. So at open, I'm going to be looking for a price to trade below ES 5606 right here. Before jumping into longs. But looking at NQ, I mean, besides the impulse up, besides the 5-wave down, 5-wave up, and the higher time frame aligning with price beginning to see a corrective rally and being in support, we also have NQ with equal highs or relative equal highs right here. So that should be crossed. Mark out the H1 FVG for NQ. So at this point, all right, we are coming close to that A wave low for SPX, that cash market A wave low. And I'm going to be looking for, ideally we get a fair value gap on the downside to look to invert and trigger a long setup to take price at least above this impulsive high. But I'm going to be looking at the 56.18% retracements, which would be roughly, well, pretty much aligns with the impulsive high, if not, the 618, which would be close to this 50% retrace. So both SPX and ES suggest higher, but we definitely want to avoid trading directly higher because there's risk that that pattern could form a bearish WXY model, and we don't want that. Instead, we want to see this triangle resolve to the downside for a second wave, and then trace out a third, fourth, fifth wave. But for now, we got 3 minutes until open. Just going to wait until price crosses this low, and then look for a fair value gap to invert to trigger a long setup. For now, ES does look like an impulse down, like a 5-wave structure. 1, 2, 3, 4, 5. Maybe the fourth is like a triangle, but we have a 5-wave down. So it could be an A wave. We could see something like this, tap at midnight, and then sweep it. But this is basically my primary bias that we are going to see this dip get bought. You take price at least above this impulsive high. I did put out a video on X, just basically going over what I'm seeing on the hourly time frame and why I believe it topped. So be sure to check that out. And I'm going to talk about this wave count, basically my wave count I've had for the last few years, and why my confidence has only increased that we have topped. But right now, with 2 minutes for open, and being that we are close to our potential entry point, I'm going to focus on that. Okay, 9:30 open. Price did tap this line, but the key is looking at SPX. I want to see SPX sweep this low right here, which it very close to doing, but I don't think it did just yet. Came like a tick away. Let me make sure. Actually, I think it did cross below. All right, so there is a good chance that we have completed this ABC down pattern for a second wave, although yes, kind of looks like a 5-wave structure, so there's a chance that we either decline directly lower right now and then push higher, form a 7-wave structure, or we bounce a little bit to midnight, revisit that white trend line or white liquidity area, and then reverse higher, forming an ABC down. So 1, 2, 3, 4, 5, A wave, corrective rally for a B wave decline for yes, and then we start to rally. And then if you look at NQ did not make a lower low. Let's see if it still holds somewhat of a triangle formation. So there's still risk that SPX sees a little bit more downside before heading lower. Now I actually want to see NQ cross this low too. All right, now ideally I want to see an M1 FEG form right here. We have 50 seconds left on this candle. I want to see this form a notable gap right here to look to inverse. Now that NQ is probably about to cross this low, and SPX is seeing more downside. So this is going to be my entry point if we get this fair value gap and invert it. Now ES or SPX, SPX kind of looks like a WXY model, as we saw a quick drop right there. I'm gonna label this second. This is kind of what it looks like, WXY with a ABC structure. Just want to see price close above this level, put a stop at this low, and ideally we start to reverse to the upside. Here you can see NDX cross this low, resolve this triangle formation. Same with SPX. So bullish setup for a second wave is intact. Just want to see confirmation on the lower time frame to give us our entry point. Like we have an SMT too with NQ right here. NQ just doesn't have a clean M1 FEG. Yes, does. But this will be a strong long setup if we could close above this. Right now, there is some risk that we trade down to the 90, 100% extensions of this potential WXY model. NQ may be leading the way just because it does have this bullish divergence, but yes, has this clean entry point right here. All right, 18 seconds. We close above this. This area should act as support. All right, so I look for longs in this FEG. NQ just ripped. With the three-wave structure for NQ, once we make a new high, we should not retrace 50% of the today's rally. So keep that in mind. I'm going to be watching that. Not sure if SPX, yes, gets down to this M1, but I would, I got my entry point in there. We have a M1 FEG along with this IFEG. We do have JOLTS data also at 10 a.m. But NQ is getting ahead here, so I think there's a pretty good chance that we take out those highs pretty soon. All right, well, we're heading to midnight, which should pause price a little bit. I mean, this is the ideal entry point, this general area. I'm just going to also mark out this M1 FEG. Possible 3 minutes, so maybe we only go down to 5, 6, 13, 14. But this does look very bullish. Just need to wait for a clear cut entry point. Also watch an NQ here, because if this, again, if this makes a new high, which I'm very close to doing, it cannot retrace greater than 50% of this rally right here. So would probably put my stop if I enter on ES right below that 50% retrace. All right, so head it in. All right, let's see if we can get this. All right, so I just got tagged long. Stop at the low. So right here we have the M1 IFEG, and the orange is the M1 FEG. So overlapping FEGs, creating a balanced price range. So price should move away from this area. And looking at ES, since this was an ABC up, we cross this high, we should not retrace 50% of this leg up. So I'll be moving my stop if that were to occur, to break even, not probably a little bit higher. All right, price is coming close to this high. I think at this point, considering my entry point's all the way down here, may move it to break even just in case, because if we were to go back down here, we're probably going to take this low, and I could look for an entry point here. And we also have JOLTS data at 10 a.m., so there is some risk that we chop around before that's released in 15 minutes. But if we do make this high, I'm going to be moving my stop up to this 50%, or I'm going to put the 55%. So right around 614 if we make a new high of the day. All right, new high of the day. I'm going to move my stop up a little bit. Again, that's because we have a ABC up. So to avoid a bearish WXY model, we should not retrace 50% of this wave down. I mean, maybe there is potential this is an A, B, C of a flat, so that would be allowed, but let's see how this structure looks. Yeah, see, this looks like an ABC up, so really need price to just go immediately. Otherwise, we could just exaggerate this more, taking price below the low of the day if we start to fail here. Yep, see, that's not great. That's not great. Mark out the 50% retrace. Yeah, all right, so I just got stopped out for 3-4 points. Now this looks like a bearish WXY model. So I think there's risk for a bit more downside. And probably at this point, I may just wait till 10 a.m. because I don't really want to long this with this structure. But let me I don't know. This is NQ looks a bit conflicting because NDX should not retrace 50% of this wave up without at least making another new high, form an impulse. Now, could this just be like a normal ABC up, not a WXY model? It's possible if it's, A, B, C, B, C, but this does look like a three-way move from 942. Keeping the options open right now. Overall, still leaning bullish and expecting price to be bought inside this 1 FEG, just a little bit uncertain for the fractal time. Particularly with jolts coming out at 10 a.m. All right, so price is rallying pretty strongly after like a potential WXY model. NQ took the high. Let's see if this is a 5. So this should be a 5-way move right here to avoid a flat. We have 1, 2, 3, 4, 5. So this rally should unfold as a 5-way move, but if it's a B wave, 3-way B wave, then this could be some sort of a triangle or a flat. Also to keep in mind, we have JOLTS data at 10 a.m., but CPI is tomorrow, so not exactly sure how aggressive we may get on the upside. Still think that we will take out at least the pre-market high and possibly the previous day high for the cash market, which is about 80 points above. Probably the best case scenario for today's session. So pretty much just looking at NQ, NDX, we pretty much just have to trade directly higher for just base, then rally to form a 5-wave up. But if we just start to see immediate downside, then I think there's a pretty good chance that we cross this low or even just like triangulate. I think the crossing this low kind of makes more sense because of the SPX structure being a ABC up, this three-wave move. So all right, so SPX tapping into that 50 retrace of this recent rally, which could be a bearish signal if we break below. All right, so this looks highly corrective. This just looks like a bearish WXY model. So I think there is risk that we cross the low of the day before heading higher. NQ also, same pattern, failed to trace out 5 waves up. So this looks like a corrective new high, threatening that you'll see a bearish flat correction and jolts could be a negative. We'll get a negative reaction from the jolts data, essentially to A equals C right at the opening lows. But this does, the structure from the high, the pre-market high for ES does look like a bullish WXY model. So I do think this overall is going to be corrective. We just may see a little bit more downside first. All right, so I'm going to be looking at this zone right below the low of the day to act as support for the second wave. But not really interested in entering while we're in this range. Want to see this low of the day swept to resolve this bearish WXY model. The only thing is that NQ not most clear pattern, or NDX. We have this ABC up and some other form of an ABC up. And if this crosses the 50% retracement of this leg, then this overall from yesterday's low will be a bearish WXY model. So that would not be great. Technically, this is an SMT as NDX. New high of the day, or new high above this internal high. SPX failed to do so. So definitely going to want to be patient. Still anticipating that we cross the pre-market high. Because of the impulse up from an ES, and we have the 5-wave down structure to complete the higher degree ABC down for the first wave. All right, so 1 minute before JOLTS data. Leading that we do cross the low of the day before potentially, ideally, extending higher, reversing higher. There is just a little bit of confusion with at least the NDX pattern. Not exactly sure what this is. Maybe this is a 1, 2, 3, 4, 5. Although if NQ is supposed to be a flat because we have the impulse up 1, 2, 3, 4, 5, and then a 3-wave new high. This should be a flat, so this should unfold as 5 waves. So I guess it's not common for price to see a flat correction with a ABC up for a first wave, but this seems to be the potential scenario, especially particularly if we cross this 50% retrace. So SPX came close, making a new low of the day, but did not. Now it's spiking big time. This pattern looks like a complete mess. But if NDX makes a new high, that will resolve pattern, so this should be a 5-wave up. This would actually make sense now if we start to reverse to the downside, making a new low. Now NDX does hold this 5-wave up. Now you see how although NDX did cross below this 50% retrace, it immediately broke out higher to make a new high. So that was completely necessary if it was going to cross that, which it did. So I would say that this is a valid 5-wave structure or leading diagonal structure. So expecting further downside beyond the low of the day to then long. And we have, again, a S&T with SPX failing to cross its internal high and NDX doing so. So and there's the reversal. All right, so ideally we get a FEG here. To inverse, but this is quite large. Also looking at the 50% retrace of this decline, as that should confirm completion of this corrective wave sequence. SPX has not actually made this new low of the day yet, and there it is. So now if price were to make a retrace greater than 50% of this recent decline, that should confirm a bullish WXY model. Just need to see SPX hold above this low. Otherwise, it may need to trace out 5 waves down again, with this decline being the first and this rally high being a second. So should remain above yesterday's previous day low to produce an upside move. So I'll even take this. Okay, so I'm going to be looking at this fair value gap to inverse. Let me just mark out cash. All right, so yeah, here it is. All right, I'm going to try for a long here. Put the stop at the previous day low. Now looking at the 50% retrace. Oops. Of this decline to confirm completion of this bullish WXY model. And if we were to inverse this M1, that will only increase confidence that we are going to reverse to the upside. And then I'll put my stop at this low, but I think I'm going to do that right now, actually, because this leg down extended 127.2% of this decline, so this is corrective. That should do it. Now for intraday targets, if you look now, the 56.8% extensions do not exceed this impulse, so this should exceed, or excuse me, target the 90-100% extensions right above here. So this is going to be the min target, pre-market high, upside to this blue box. We have a 3-minute FVG. That price is rejecting a little bit here. Price remains respecting this H1 FVG. All right, now we have a bullish FVG right here, which is a good sign after inverting this M1. So no FVG on the M5, but we do have one on the M3. So goes above this one right here. That should lead the way to take out that data high. All right, so we also retrace greater than 50% of this decline, thus confirming the bullish WXY model. So a new high above 5632 for the cash is strongly favored. And since ES also has this bullish WXY model, we really should just target the pre-market high at 5651 with the 100% extensions at 5662, 5672. If we, or really once we close above this M3, I'm going to move my stop to break even. All right, so we're not going to invert the M3 during this candle. On the fractal, like an ABC up with this little B wave of a triangle. So probably going to revisit this little area. Go ahead and higher. All right, tapping into this M1. Now we have a M1 FEG here. So this could be a spot to look to add if we were to invert this. But overall, at this moment, leaning higher against the low of the day, since we should have confirmed a bullish WXY model after retracing 50% of this decline. So we have an A, B, C, three-way move. So no reason why we should cross this low. Also factoring in that SPX should have terminated the second wave at yesterday's low, and ES did so post-market. But price is currently respecting this M1 FEG, this orange box, but got 20 seconds left. All right, right here we should start to see price reverse. We just tapped into the low range of this FEG and the 618% extension retracement. Ideally, this does it. Don't really want to see price go all the way down to my entry point. Looks like a ABC down on the fractal time frame. Breaking that fractal 0B trend line. So being that we have an ABC down for here, and I measure the 56.18% extensions, the 618 is above my entry point, so I'm going to put my stop at break even, because if the 618% is crossed, I think there is risk that we do take out this low. All right, we need to see price get bought up right now. Want to see price retrace greater than 50% of this to form a fractal bullish WXY model. All right. Stop to break even now. You should not even test these lows. Actually, I'm just going to put it at this low right here because this is where the fractal bullish WXY model is formed. So basically, just risking basically a point, 2 points. But this low should not be crossed. Otherwise, strong risk that we cross the low of the day, thus the previous day low. So we do have a larger bullish WXY model here, and we got another one here. So we do have a bullish setup, factoring in the higher time frame, anticipating a second wave rally. Price did invert this M1 FEG, but you see it did take out liquidity on this little candle, so not going to use that anymore now that this has been disrespected. So just focus on this M3 FEG and this little M1 in this little area. But once we make a high right here, ideally we just start to break out to the upside, targeting this blue zone, A equals C. We do still have data highs not crossed. So this is also a draw on liquidity. But for that, we really need to see this M3 get inverted. Coming into a fractal M1 FEG, so this should act as support to push price higher. Really need to see buying right now. Don't really like this. I think we may actually cross this low. This is much weaker than expected. We start to bounce here, we really should just go. Hmm. I'd really like this for a second entry if we do bounce immediately right here with ES not crossing this low, because NQ did cross it. So there is a potential bullish SMT on this fractal time frame. Then we would have a M1 FEG to invert right here. But really want to see price hold this thing right here. All right, let's get some buying, please. And if I do get stopped out, then I'm just going to look at this M1 FEG right here to invert. All right, well, that's unfortunate. Now looking at this zone, you get back in. Really choppy price action right now. This is gross. But this decline just looks very corrective, so all right. New low of the day. Do not want to see price cross the previous day low. All right, so we're about 5 points away from the previous day low. If we do make a new low, then I think there is risk that this is a third wave. And we're going to need to trace out, 5 waves down again for the C wave. Definitely be a bit confusing just because ES does look like an impulse up. 1, 2, 3, 4, 5. And I already traced out 5 waves down, so. Unless this is just a 1, 2, 3, 4, 5. This is a fourth, and we're going to decline for a fifth. All right, now we have an M3 FEG right here. So leaning bullish, as long as we do not cross the intraday low, previous day low. This decline just looks so corrective. But SPX came so close of crossing it, but did not. Now I just want to see this M3 get inverted. Also looking at NQ to see if this retraces greater than 50% of this recent decline to form a well-defined bullish WXY model. Because SPX, I mean, you could argue that this is a impulse down. So 1, 2, 3, 4, 5 to see a rally and then cross the low. But if you look at NQ, since it made a new high, this would just be a three-way move, ABC down for another three-way move. So retracement of greater than 50% would confirm this being a bullish WXY model, aligning with this bullish impulse up. I am definitely tempted to just long here since we're so close to the invalidation point. But I'm having some success, some good success, just waiting for, price to invert the downside fair value gaps, basically confirming my bias. But ideally, we have reached the low of the day. Coming up on 10:35. So that's also kind of why I'm a little bit hesitant to jump in longs, as we're basically just spending an hour correcting so close to the previous day low, which should not be crossed if we are beginning the second wave rally. Now, yes, technically does have equal lows here. Doesn't mean too short though. Just brings a bit more risk that it gets crossed. All right, there's the pop. All right, so SPX still has not crossed the previous day low. About 4 or 5 points away. Damn. It's also why you're patient, because I could have easily just longed in anticipation that this low does not get crossed, but would have been stopped out. Not stopped out for much, but that wouldn't have happened if we inverted this little M3 FEG. So now I think the overnight low is going to be crossed. This is just really, really choppy. Because if you look at ES, we have the 5-wave down. So to match the 5-wave down from the peak and the 5-wave down from Friday's high, this leg down should also unfold in 5 waves. So maybe this is just an impulse down. So not an ABC, but a 1, 2, 3, 4, 5. If so, looking at the 56.8% extensions of this third wave. So it looks like there's 30 points of downside. NQ did not take it slow yet. I mean, I guess this makes more sense considering CPI is tomorrow, that it leads the charge for a corrective rally. But now there is risk that we see one more bounce. So let's say if this is just an A wave, now that we have 5 waves down. So 1, 2, 3, 4, 5. So this could be an A wave. There is a potential daily FEG forming. So we could see price reject in this area and produce another leg down before actually completing the first wave. But somehow going to try to fit an impulse down for ES. So I think I would have to label this that up. So label this as the first wave, second wave, and we should be in the midst of a third, rally for a fourth, then decline for a fifth, leading to this 50% extension of this third. So anticipating more downside, probably gonna see another 30 points, but risk for a rally shortly. We just took out the post-market low. possibly rallying for the fourth wave. NQ may be showing some relative strength here. And as I mentioned, since this was a corrective B wave, after potentially forming 5 waves up, oh, ES invalidated this, so there's, oh, excuse me, this is ES. So NQ does hold a potential 5 wave up. The impulse for ES got invalidated, which brings risk that NQ will also trade below its post-market low, barring this being a flat correction, probably to the 200% extension area. You can see here we have a 1, 2, 1, 2, 3, 4, 5, 3, and we're rallying for the fourth, climb for the fifth. So this could be an ABC flat correction. But I think both ES and NQ should form 5 waves down. ES would be a diagonal, so ABC, first wave, AB, 1, 2, 3, 4, 5. Make sure this is a valid structure. So NQ resembles more of a fourth wave, retracing 382% of this third, tapping into the M5, M3, FEG. So this should be a termination point for the fourth if we're going to produce a fifth wave. Now ES, this fourth wave looks quite short. See if it retraced 6%. So it did retrace 236%. Maybe we triangulate to be more proportional with this second wave right here. This took about half an hour and rallied almost 40 points. Right now, took about 7 minutes or less, 5 minutes, and rallied 20 points. So both short in time and distance traveled. I think a better looking fourth wave just be like another modest high and then climb. But this does look incomplete, as we should be getting 5 waves down for ES. we look at SBX on the lower time frame, this should also unfold as 5 waves down. We have an A, B, C for a first wave, A, B, C for a third. Should be in the fourth wave position. First, I was a little bit uncertain if this was actually valid because of this little fractal third wave. On ES, it looks like it's shorter, but if you measure this out, go to the 100% extension of this fractal first. This third wave actually exceeds it, so third is greater than the first, so this is valid. So expecting price to reject this area. So I think I'm going to look for shorts here. Look at A equals C for this fractal time frame. All right, price is coming into the 90, 100% extensions. Going to be looking for some shorts here. All right, we're tapping into the M3. I'm going to take it with the stop above the 127.2% extension, because if this is corrective, this should not be should not really extend too far above the 100% extension. NQ is right at the 50%, so this should reject quite quickly. Also, just want to see NQ close below this M3 FEG. If we invert it, I think that'll increase odds that this will fail. So 7 seconds left. All right, so we did close it below it. Want to see price reject immediately. NQ retracing the 50% and the 127.2%. Want to see price reject right here. And ideally, we see this M1 FEG right here get inverted, but also looking at the 50% retrace of this decline to confirm that this is a three-wave move. Outside targets, I'm looking at the 56.18% extension if we make a new low. Right in this blue box. All right, so this is the last candle of this M3. So as long as we close below zone for both NQ and ES, we should have completed the fourth wave. And I'm going to put my stop at this internal high right here. We have a three-wave move. NQ retrace 50%, and the second wave extended 127.2%. So no real reason, if this is going to be a fourth wave, that we make a new high. Otherwise, it'll kind of look like a five-wave up potentially. So just going to move my stop lower. Now if we get this inversion, so right now risking about 6 points for at least 25 this low. If not, about 30. Let's see if we could get it close below this guy. There we go. Keep going. All right, 10 seconds before this candle closes. Ideally we get an inversion, which looks quite likely. So that would only increase odds that the fourth wave just completed at this internal high. But you kind of see my process of trying to short corrective waves. I put my stop above the 127.2% extension. As soon as I enter, looking for confluence. So we had the 90-100% extensions lining with this M3 fair value gap, which should act as resistance if we were going to produce a lower low, which it did. And as we started to retrace this second leg of this ABC up, or really WXY, I moved my stop to this high. All right, so stop the break even. I mean, SPX does technically have room to 5,523. So we are going to see a fifth wave produced here. So probably not going to hold it until then. Once a new low is made, then my stop will be put at the 50% retrace of this decline. But while above this, there is like risk for a triangle. But right now, just risk free. All right, don't really like the aggressive bounce here, but I am leaning that, again, this is going to be subdivided by ABC down pattern. Ideally, we just reject immediately right here. And if this is the A wave of the ABC down pattern for fifth, probably going to send 100% of it aligns with this target zone right here, the 50% extension of this third. So this is going to be a good area to take profit if we were to make a new low. And if we do make a new low, since we have, 5 waves down from the high and 3 impulses, I'm gonna edit this in a bit, but 1, 2, 3, 4, 5, then my lean would be bullish. So would probably anticipate a bounce, especially if we retrace 50% of this overall impulse from the pre-market high. So if we look here, we measure the extension of this leg up, A equals C. pretty much would put it right below my entry point, but ideally we don't even see that. All right, ideally we pretty much reject immediately here. I draw this trend line too. So we did break above this, which is potentially a bullish warning sign. You really don't want to see the fractal waves overlap the second, fourth wave area. Otherwise, this probably is going to be a triangle. I'm going to move my stop up a little bit. All right, so we're seeing some red. Not buying this run. Oh, God, this is gross. All right. All right, I got stopped out. Quite frustrating. Still expecting a fourth wave. But this is just not clean. I should have just put my stop at the cross of this white trend line. Now a little bit less confident because NQ retrace greater than 50% of the third. Actually retrace greater than 618%. You know, if we see a very sharp decline here, still would be in proportion. You know, it just makes the most sense to decline here. See if price can close below this M3. Right now it's between the 100 and 127.2% extensions. So this could just be an exaggerated WXY, but we just closed above it. Frustrating day. Left some good amount of points on the board, just expecting continuation, but yeah, this is gross. Can't even count this as a triangle because this crossed this high. Now I'm wondering if this is a flat correction. This low was a B wave of a flat. and we may be seeing some sort of a pattern like 1, 2, 3, 4, 5. A, the fourth kind of makes more sense, just considering how small this fourth wave would be relative to this guy. So right now, basically, I'm eyeing this pattern. So it's 1, 2, 3, 4, 5. But I think there's a pretty decent chance that this is a flat. Because this is just, let me make sure that you really can't count this. I mean, no, it doesn't really make sense. So if you look here, so we have this ABC down pattern. And if this is, this structure, so ABC down for a first wave, second wave at the 10 a.m. high, third wave, fourth wave, this unfolded as a 5-wave down. So this does not match this ABC down for the first. So it looks more likely that this is corrective B wave of a flat. I want to see if we actually trace out that pattern, because flats are typically hard to project until you actually have every single wave traced out and you're at common fib extension. So me looking at this blue shaded area, and want to see this leg down hold above the 50% retrace, because this is a 3-wave move. Now there's also potential of a triangle, so A wave, B wave, C wave, wave, E wave. So something like this: A, B, C, E. So this is also on the table if it's not a flat. All right, so I'm going to zoom out a bit, make sure. Does this make sense with ES? Because ES made a lower low. So again, so we have 5 waves down. From Friday's high. So this decline, as mentioned, should unfold as a 5, since we did make a new low. But this does look like a 3-wave move. Now, let's see if this makes sense. We look at A equals C. So A equals C for ES is all the way up here. So that does not align with SPX. Maybe it's the 6.8% retrace. That seems to make more sense for a running flat. So something like this. So A, B, C. Now looking at NQ, possibly a triangle. A, B, C, D, E. Less likely that this is a flat. I'm not exactly sure if NQ is going to cross its post-market low, but NDX did. Also with a clearly ABC down, so this does not align with this pattern really. And just a reminder that CPI is tomorrow morning at 8:30, which is probably why we're seeing some hesitation down in this area. It's possible that this is just an impulse down. But again, since this decline was a three-way move, not matching the five-wave structure from the February 19th high to March 7th low, I think it's probably more likely we're triangulating or producing a bearish fourth wave flat. So I'm not sure if SPX, if this is a flat that SPX actually reaches A equals C. ES is a flat. The 618% extension of A is right here at 5612, which is a little bit lower. I think pretty much at 5606 because SPX is 6 points lower than ES. Yeah, this should be the fourth wave right here. Looks like so ABC up. 1, 2, 3, 4, 5, ABC. Could also just be an A wave, but this is, beginning to be quite time consuming, resembling more of a fourth. So yeah, especially with this decline. Now, if we fail here, tracing greater than 50% of this leg up, this potential third, then I would lean that we are forming a triangle pattern. All right, with this little burst. But a 5-wave up to SPX 5, 6, 10, 11. I think I like the odds of it reversing lower. And could be a nice short position or short entry. Factoring in just an impulse up either way would suggest a corrective pullback. But if it's a larger ABC up pattern of a flat, then we should just trade directly lower. Yes, tapping into its M5BG. A NQ does lack FEGs on the downside. I think there's an M15 here. That if we make a new high, this could act as resistance. So pretty much just looking for confluence to align with the potential that this is a flat, because we want to see, a fair value gap align with the fib extensions. All right, so if we draw the 6.8% extension of both the first and the third wave, that aligns with the 90% extension. It's technically right below, but so that's the 100% extension of AB for the potential flat. See if we have an inversion somewhere. Yeah, so no fair value gaps to invert on this decline. It's not like the worst long setup, but there is risk that this fails and we start to triangulate. Like we could even see something like this. So it could be very choppy waters if we start to fail here. Failing to trace out 5 waves up. And my bias being that we produce a 3-wave move while expecting a 5-wave down, my bias is that the low of the day does get crossed. And if you factor in CPI tomorrow, it does kind of make sense to kind of just chop and for the CPI to act as the catalyst for the bullish reversal for the second wave. But if I was bullish against this low, wouldn't be too confident, but the setup is there. Definitely want to see price hold above this. I mean, we also have this data high here, which tends to act as liquidity. So price often tends to, take the data high. Obviously not really in this structure, but, it takes the data high and then produces the downside move. So that is an option. And if we do fail here, it's possible we try to take that to form a triangle. And it looks like this may not be a fourth wave with this lower low here. And if it is, pretty much need to rally immediately higher to make a new high. NQ, NDX did not make a lower low yet. Now we have confluence at ES 5613. So that's the 618% extension of this potential first and third wave, and the 618% extension of A. Ideally, this is a quite sharp rally, and we get a nice M1 FEG to look to invert and trigger a short entry. Now there is risk that this is a triangle, so could see something like this: impulse up, corrective move, taking out the fourth wave extreme. Then we continue to chop again, then decline, or form the triangle and then decline. So this is also a potential option. So there is a M30 FEG for SBX here. So I think for the bear case, you'd want to see price make that higher high during this 30-minute candle and reject quite quickly, breaking back below this M30. So I'm going to highlight this guy and monitor it, because if we do get an M30 close above it, that would reduce confidence a little bit. There's no real clear FEG. And there's an M15 here too. I don't consider this like the perfect short setup, but this just makes sense. We are also officially in lunchtime hours past 11:30, so risks increase in seeing some chop and just trappy moves. So keep that in mind. Not really what you want to see if you're looking for a fifth wave up. Breaking the 2-4 trend line right here. So this could be a triangle due to this break. So let's see what happens, but risk is increasing that this is going to trade sideways, especially if this makes a lower low right here. Hmm. Looking on the 15-second, kind of looks like a 5-wave down, so maybe this is flat. All right, so big spike here. Want to see this get as close to the 90% extension of AB and the 6.8 extension of the first and the third wave. We have hit the 50%, so chance that this is done. And the all right, so both the 6% extensions for yes and Q tapping into its M15. VX doing the same. So at this point, I think there is risk for a bit more upside, so another 7 points. But I'm going to be looking for an inversion, a fair value gap to invert. Just want to be patient, being that we are in the time hours, and this could go a few different ways, either a triangle pattern or a 5-wave impulse right flat. So we are getting the 5-wave structure for the potential flat. Just want to make sure we do see some bearishness. Like this FEG, not too big. So we are looking for like an ABC up structure. If you just look at the first wave, the three-wave move. This third wave also looks like a three-wave move. 1, 2, 3, 4, 5, A, B, C. So this little dip right here could be the A wave. And we are rounding out the C wave. All right, that may do it. Now we have a ABC up, trying to reject at the 6.18% extension of the first and the third, and the 6.8% extension of A for ES specifically. SPX still has a little bit more room to go, 5 points, but we do have a valid ABC up structure to match or to validate the potential that this 5-wave up is complete, particularly if we retrace 50% of the C wave, which we just did. Now we do kind of have equal highs here. But we do have equal highs here. But we did cross it, so let's see. Let's see if we invert this M1. This should trigger a sell, at least down to here. To see a lower low, we're probably going to need this M5 be closed below, favoring a new low for a fifth. And also I am monitoring this M30 FEG here. We want to see price close below it in the next 14 minutes. All right, that should do it. So we do have a 5-wave up structure. And it looks like we retrace 50% of this 5th wave. I'll put the labels on ES as well. All right, so we got 10 seconds left before we close this candle, potentially inverting this M1. If we do, we'll be looking for shorts, but already leaning that the impulse is complete. All right, so NQ actually inverted it, and it's back in this range. So I would like to get shorts in this area. There's a small M1 FEG here. Let's see if we cross the 2-4 trend line too. Not just yet, but all right, so I am in, putting a stop at the high, looking for at least the fourth wave extreme here, with potential that we trade directly lower. Now, if we were to make a new high, direct new high, this would have to be a 7-wave price swing, and that would increase odds that a triangle pattern is playing out. It would likely expect, price to decline, but there's also a risk that we try for the data high if we make a new high above here, invalidating the 5-wave impulse. Fifteen-second kind of looks like some form of 3-way move, possibly a ABC, X, ABC. So possible bearish WXY model, but want to see a sharp rejection soon. Again, looking at the M30 FEG, we have 8 minutes left until this candle closes. Want to close below it. So if we are going to reverse to the downside, should occur within the next 8 minutes. As an inversion of this M30, this gray shaded area, would increase odds that we see further rally intraday and just continue to chop for CPI, which is certainly a possibility. But we do have a bearish flat correction setup against this. I'm not sure if this is the high of the day. It's not the high of the day, but this internal high. Good rejection here. Pull up. So ES has this M30 right here. almost closed above the M15, but did not. This is the 3. Don't want to see a new high above here. I am probably just considering that we are in, the midst of lunchtime hours, basically 5 minutes till noon, where price tends to get quite choppy. I'm probably going to um, move my stop, break even quickly if we were to make a new low. But we have 5 minutes left until the M30 candle is closed, and really want to see price close below that. Otherwise, I don't think this setup is going to work out, because this would just be potentially bullish. So ideally, we just see a sharp move down in the next 5 minutes. But already not really liking this chop. Because if this is a fourth wave, we should begin a new trend leg lower, or a fifth. I don't want to see price triangulate right here either. So A, B, C, D, E. All right, so we got just under 4 minutes left, and we need to decline 7 points the next like 5 minutes to remain below this M30 FEG. So there is a potential that I do get stopped out at break even here if we fail to decline within the next 5 minutes. This pattern kind of looks like a triangle, so maybe it's like A, B, C, D, E, B, C, rally back, and then decline. So I may be quick to either take profit, or definitely going to move my stop loss to break even once we take out these lows, which just happened, I believe. Yeah, SPX just took out the low, so really should not go back to this entry point. And we have a potential bullish SMT with NQ, since it did not make a lower low yet. So I'm just playing defense now. We are in lunchtime hours, which is why I may not just like put my stop at this high. I may just kind of wait for a re-entry if we were to rally back. Now let's see. We got a minute 30. Want to see us close below this M30, which looks pretty good right now. We just saw a pretty sharp decline. And that's pretty much what we really want to see, because this should be the beginning of a fifth wave. All right, 1 minute left. See if the bears can hold. Nice big fat red candle. 5 minute. Really don't want to see this M5 FEG act as support to produce ABC up to take out the data high. Is certainly possible. So because this could still very well be a large triangle. Gonna let this run for a little bit. But if we get an M5 close below this, odds will be very high that we make a new low entering the fifth wave. And I'm a little bit skeptical about this like little sideways chop. This could be a triangle pattern, a corrective B wave of a triangle pattern. Increasing odds that this is an A wave of a larger ABC pattern. A, B, C, and then to like continue trading sideways. This was a strong placement move, and we did respect the M30 FEG, which is pink shaded area. But all eyes are on this M5. And I am, now that we did cross this fourth wave extreme, I am a little bit concerned that this could complete this B wave. So I am thinking about taking profit here. Especially considering we're in the lunchtime hours. So I think I'm going to lock in just 20 points and kind of just see what happens here. Or at least just move my stop. I don't really want to get squeezed and go back to break even, which has happened 2-3 times today. So right now, unrealized only down like 1 point. And just looking at SPX, if this is like a 1, 2, 3, 4, 5, should be done to make a lower low for an ABC down. So going to start moving my stop lower. And lock in, 13 points. Because this rally was, get it, 10 points. So above my stop would be probably greater than 10 points. So this would increase odds that this is just a B wave of a triangle, and this overall decline is a B wave of a ABC pattern. So put my stop to this high. Should pretty much decline directly lower if bearish. So just gonna lock in 14 points if I do get stopped out. And then I'd probably just wait until 2:30, 3 p.m. See if we get like a triangle pattern if we do break above this, and just don't decline directly lower. They also have an inversion actually right here, which is not really a bullish sign. I mean, we did take out this 1 minute candle high, but then we have a larger M3, M5, but I'd rather just leave this gap open. If this is bearish, definitely want to see just price continue to make a lower low. Ideally just escalate, closing below this M5, but it is lunchtime hours. We're at past noon, 5 minutes past noon, so that's kind of why I unlikely will be able to hold till potentially crossing today's low, entering a fifth. I do think there is some risk that this impulse is not of a flat if we were to break above this high at right now. So interested to see if we make a new low, how far we extend. Could be, just a 1, 2, 3, 4, 5. And this would also suggest a corrective rally, probably back above here because there's a M5 FEG in this area. So going to take profit if we make a lower low, and we're doing that. So move my stop down. I do kind of just want to give this a chance to see if we do close below this M5. We've got 2 minutes left in this candle with a potential 5-wave structure though. So looking at the 50% retrace, I'm actually going to put the 50% right here. So yeah, that's where my stop is. But potential 5-wave down here. Just looking at time. I mean, at the same time, I guess we could invert this M5, still produce a corrective rally back to here, and then reject. So I'm going to just take profit here. That was about 24 points. 24 points on the day. Actually, that was actually like 29, not 24. So nice short trade there. Got 45 seconds. We are in this M5 FEG, so there is risk that we produce a corrective rally back to this M5 before heading lower. But a close below this would increase odds that this is not going to be a triangle but a flat. You take out this low and basically just continue trading lower the rest of the session, entering a fifth wave decline. But NQ is still holding above its H1 FEG, so there is a SMT here because ES made a lower low, NQ did not. So this is potentially bullish, but all right, well, we just failed to close below the M5. Still not really showing enough strength. Now, if this pattern kind of happened during 9:30, 10 a.m., even before 11 a.m., I'd be more inclined to kind of just hold it to see if we cross the lows. But, you know, I often just get burned trying to hold for more during these lunchtime hours, especially with like the risk. Like, yeah, this is an impulse up. So, yeah, this could easily just be an ABC or an A, B, C. Take out the data high, even. You know, it's still a possibility if we manage to remain above this M5. 3 minutes, 30 seconds left. All right, one more minute left until this 5-minute candle closes, and it looks like we are going to invert this FEG, favoring the fourth wave of a flat correction occurring. So I'm going to draw the potential downside targets once we get that confirmation. So looking at either 5,522. So this is drawn from this A wave extreme. Technically not the fourth wave though. So I'm going to draw it from the fourth wave as well. Get this. So top of the Friday's high down to yesterday's low and put it at today's high, where the C wave of a flat most likely was produced. So that would align with 5,500. So in this general area, I think we have downside potential. So 40, 60 points if we were to make a new low, which should occur considering that we inverted this M5, which should now act as resistance. NDX and Q looks quite sloppy. Doesn't really look like a flat considering how much time this A wave took. But we do have that 3, 3, 5 structure for NQ. Unless it's like something very obvious, I'm probably not going to take another setup. NQ with a small 5 FE here, which may act as resistance. Actually, ES has one. So overall, just leaning that we're probably going to start trending lower. But I may be hopping off on stream just to take a break. Been looking at the market for 3 hours straight and got my 29 points. So since we're in the midst of lunchtime hours, we may decline, but it may be a little bit choppy, especially considering how small this short and shallow this fourth wave is. So this could be a real grind down until close. And yeah, I mean, technically, I guess there is still risk that we cross this high, but I think with this M5 inversion, odds are that we just trade directly lower to take out this low of the day. Just a little bit concerned about the SMT for NQ. If you're bearish, I'm working. If you're bearish, you want to see price invalidate the SMT here, because right now NQ showing relative strength, holding within this H1 FEG, and there has a bullish SMT with ES right here. So there is some risk that we got more. But yeah, we do have a bearish flat correction set up for a fourth wave. SPX kind of looks like a 5-wave down. It's not really perfectly clean. 1, 2, 3, 4, 5. Just a little skeptical about this little pattern because this could just be a B wave. And just a very highly extended C wave. Not exactly sure, but so I am not going to take any trades until maybe like the afternoon. Just gonna wait until see how price resolves, but there is the potential that we trade directly lower. Going to want to respect this M5 FEG. Same with NQ. Just a little bit concerned about the relative strength of NQ here with this SMT and holding above this H1 FEG. So if you are trading this, pay close attention to NQ because it does look quite bullish and it does bring risk that we will take out the 11:40 a.m. high before heading lower in the form of a triangle. So I'm going to just take a break. Could easily just start rejecting right now, but I'm going to miss the move and preserve mental capital. So I will see you guys in a little bit.